Hello, and welcome to our weekly market roundup, your one-stop source for the latest in global market trends, key economic insights, and top financial news. I'm your host, Daniel, bringing you the highlights and the happenings from around the world. Markets embrace the first full week of President Trump's new term with a wave of optimism, as trade policy uncertainty gave way to measured pragmatism and some intriguing AI-driven announcements. Equities surged globally, while energy markets and consumer sentiment presented a more mixed story. Let's dive in. Major U.S. stock indexes rallied, driven by confidence in trade policy moderation and tech sector exuberance. The S&P 500 hit a new record high on Thursday before pulling back slightly, while the Dow Jones and Nasdaq joined the uptrend. Growth stocks outperformed value shares for the first time this year, reflecting renewed enthusiasm for sectors like technology. President Trump's decision to delay imposing new tariffs reassured markets. While tariffs on Canada and Mexico were floated for February, his comments on China hinted at a willingness to negotiate. On Tuesday, the announcement of Stargate, a joint venture between SoftBank, OpenAI, Oracle, and MGX, promising $500 billion USD in US AI infrastructure, supercharged AI-related equities. January's S&P Global data showed manufacturing activity rebounding after 6 months of contraction, bolstering economic optimism. Existing home sales rose plus 2.2% in December, but 2024 marked the weakest year for home sales since 1995 due to elevated mortgage rates. The University of Michigan's Index of Consumer Sentiment dipped to 71.1 in January, weighed by concerns over inflation and unemployment. European equities gained ground, buoyed by hopes of further ECB rate cuts and the absence of immediate US tariffs. France's CAC 40 up 2.83%, and Germany's DAX, up 2.35%, led the charge, while Italy's FTSE MIB was a notable laggard with minus 0.18%. Wage growth surged to 6.0%, ex-bonuses, in November, the fastest pace in 6 months, though unemployment unexpectedly ticked up to 4.4%. reflecting a weakening labor market. Eurozone business activity edged back into growth territory in January, with the composite PMI rising to 50.2. Services expanded, but manufacturing remained in contraction. The European Central Bank, ECB, appeared set for further rate cuts, with officials hinting at easing moves in January and March. Japanese equities soared, with the Nikkei 225 climbing 3.85% on optimism surrounding Trump's trade policy and the Bank of Japan's BOJ hawkish pivot. The central bank raised its policy rate by 0.25% to 0.50%, its highest level since 2008. Inflation expectations were revised upward, and policymakers hinted at further hikes in 2025. Core inflation rose 3.0% year-over-year in December, keeping pressure on the BOJ to tighten further. The yen strengthened modestly against the dollar, supported by comments from Japan's finance minister and the BOJ's hawkish tone. Chinese equities posted modest gains as investors interpreted Trump's softer stance on tariffs as a sign of potential negotiation. The Shanghai Composite rose 0.33%, while Hong Kong's Hang Seng Index gained 2.46%. The youth unemployment rate fell for the fourth consecutive month, signaling gradual labor market improvement. The People's Bank of China left key loan rates unchanged, though analysts expect further easing in 2025 to support growth. Markets widely expect rates to remain unchanged, but Chair Powell's comments on the outlook for inflation and future rate paths will be crucial. Initial estimates are projected to show 3.0% annualized growth, reflecting continued resilience in the U.S. economy. January data on home prices will show whether the housing market continues to weaken under the weight of rising mortgage rates. Updated figures for January will reflect the health of the sector as it contends with higher energy costs and softening global demand. Investors anticipate a rate cut, with comments from ECB President Lagarde likely to provide further clarity on the central bank's path forward. Tokyo's January core inflation data, a reliable leading indicator, will be closely watched. Persistent inflation could reinforce the Bank of Japan's hawkish stance. December's data for industrial output and retail sales will provide a snapshot of the economy's end-of-year momentum, particularly in sectors benefiting from global trade recovery. Official manufacturing and services PMIs will be released Friday, offering insights into economic momentum as Beijing ramps up stimulus. That's a wrap for this week's Market Roundup. Thanks for tuning in. Be sure to subscribe and hit the bell icon to stay updated with the latest market news and analysis. Until next time, stay informed and stay ahead. I'm Daniel, and I'll see you next week.